In this video, we will be discussing several different methods of entry when using the wealth crossover indicator. Please note that all FoxEx videos related to trade management are not intended to offer rigid guidelines. On the contrary, our trade management videos are designed to offer the FoxEx trading community a range of options which can then be integrated into existing trading routines according to each individual trader personality type. At FoxEx, we are reluctant to offer a one-size-fits-all system on the subject of trade management because we understand that each individual trader will have his or her own unique outlook and appetite or aversion towards risk. Okay, so let's get started. At FoxEx, when using the wealth crossover indicator, we recommend the use of either stop orders or limit orders, with stop orders being our preferred method of entering the market. Limit orders are also fine, but there is a small advantage to the use of stop orders, which we will discuss in a later video. So the big question regarding entries, of course, is very simply this: when do I enter the market? The first step in this process of identifying a good entry is to really understand how the wealth crossover indicator works so that you can identify a really good trade setup from a mediocre one. We have produced several videos covering the wealth crossover, and if you are not yet fluent with it, then we strongly recommend that you stop here and take another look at those videos and get yourself acquainted with this indicator. So what is the difference between a good setup and a mediocre setup when using the wealth crossover? Let's take a closer look at some historical examples here on the GBP JPY. When identifying a nice wide swing in the market, notice that the lines of the wealth crossover have got certain characteristics. Here in this example, notice how the blue line swings out really wide, with the purple line also swinging out quite wide, and the orange line more or less passing through the center of price action. These wide swinging lines of the wealth crossover indicator are really strong indications that price will move aggressively after the turn until it reaches the other end of the wave, or the white line. In this example, notice that as the market begins to flatten out in this area shown here, the swings or the curves of the wealth crossover lines are significantly reduced, thus confirming the likelihood of an area of sideways movement, which, as you all know, is not conducive to success and is not what we are looking for as traders. Step number one then is simply to look for these wide swinging lines of the wealth crossover, and if possible, avoid areas where the lines are tangled up and moving sideways. For the sake of a clear-cut example, let's stay here on the pound yen and assume that we have identified a good setup. The lines of the wealth crossover indicator are fanning out very nicely, and we have already got a good estimate of the turn here at the end of the wave. Now, in terms of identifying a good entry, the second step in this process is to patiently wait for price action to communicate with us and give us a signal when it reaches the vicinity of the end of the wave. Please allow me to say that last sentence again. In terms of identifying a good entry, the second step is to patiently wait for price action to communicate with us and give us a signal when it reaches the vicinity of the end of the wave. Here we're not talking about deep complexities of price action. We're just simply saying that a turn in the market will always be reflected by the size, shape and color of the bars on the chart. It really is as simple as that. For example, here we can see that the market was moving aggressively to the upside over this series of green buyer bars, and then once price reached the end of the wealth crossover wave, we simply stalk the market and bang, red bars start to appear. Since we already have an excellent estimate of the turn provided by the wealth crossover, we are simply stalking the market just like a fox and waiting for price action to confirm that we are indeed turning to the downside. This is how it is done with the wealth crossover indicator. In very simple terms, we leverage the white lines or the waves of the wealth crossover and couple that information with some very basic knowledge of price action, and that is all. So in terms of entry positions, here are several options that you can use when using the wealth crossover. Option 1 is simply to place a limit order at the tip of the wave. Of course, this option ensures that you enter the market at the very tip of the wave if and when price reaches that level. Option 2 is to place a stop order at either the low or the close of the first significant candle, which signifies that the market is turning. Of course, in a long trade, we would use the high of the candle and not the low. In this example, this would be this candle shown here. Please note that when using this method, or option 2, the definition of a quote-unquote significant candle will be based on the size of the previous candles of the symbol in question. Option 3 is to place a stop order at either the low or the close of the second candle, which signifies that the market is turning. Again, we would use the high of the candle in the case of a long trade. Option number 4 is simply to place a stop order at the point which price comes back and interacts with the blue line of the wealth crossover. Option number 5 is to halve the risk. For example, if you typically trade 1% of your account, you may want to consider placing an order for 0.5% based on, say, option 1 or option 2, then place a second order for 0.5% based on option 4. The sixth and last option is to drop down into the lower time frame and select one of the above options based on the wave structure or the white lines of the H4 or the H1 charts. Please note that with this method we can still place the order on the daily charts, but we simply drop down or scale in to the lower time frames in order to identify the optimum entry point. For more information on how to accomplish this, please take a look at our second wealth crossover video shown here. In closing then, please remember that all entry methods will inevitably have varying degrees of efficiency and compatibility with you, the trader. The idea is to choose a method which resonates with you and with your lifestyle, and at all costs avoid jumping from one method to another, because this jumping around is a bad trading habit and is the hallmark of inconsistency. This has been a short video on the methods of entry when using the wealth crossover indicator from FoxEx.